Good evening, everyone. Welcome back to the channel. So I had to try twice to get this video out. The first time had sound but no visual. Second time had visual but no sound. And I tried on StreamYard, so I'm back on Zoom, but starting to run out of space on my main computer, so I may have to look into something else very soon. Anyway, so the third time's the charm with this. So in this video, I wanted to discuss what an idiot I was for selling out of MercadoLibre too soon. Now, this is a bit outdated because this was recorded for yesterday when MercadoLibre experienced a significant earnings beat. And when things work out like this is the classic example of an earnings blast scenario, as you can see on the chart here. So just let's look over the past week. MercadoLibre stock went from under $800 a share at open of market Monday, August 1st, all the way to a high of 1,070 on Thursday, August 4th at open of market. And you can see almost a straight line up was a result of an earnings beat, which significantly drove the stock price up. The stock today settled down and it's $1,019.32 a share. So it dropped today. But for the earnings beat that we saw on August 4th, it was up significantly. And if we look down here for earnings, you can see that it was a significant beat. So I'm convinced that, and I said in my last video that I did on this, I said that I have a feeling that I'm going to regret selling this because I thought it could end up getting a lot higher, because just looking at the historical price, this was trading around $2,000 a share not too long ago. So, and this was down to like $630 a share back in June. So I had a feeling this could get significantly higher than what it's been trading at. So, and I did do well. I was up 59% in the option that I sold, which happened to be my biggest win of the year. But there was a lot of more meat left on the bone that I missed out on. And I think I've just about got this down to a science now. So going forward, like I've said in other videos, have a calendar of earnings, trade leaps, which what I've started to do, I've kind of amended my approach because I've lost a lot on like shorter term call options. And now what I'm doing, I'm actually, instead of buying stocks, I'm doing leaps, long-term equity anticipation call options, basically a year or more out. They function just about the same as stocks, except you have control over 100 shares per one contract instead of buying 100 shares of that stock. So for a much cheaper price, you can have control over much more shares of the stock. So like if we take MercadoLibre, for example, at how it closed today, just say 1,020. If you were to buy 100 shares of that, you would have to come up with $102,000. But if you were buying an option in it, you would buy at whatever the strike price is for that option to control 100 shares, which is a lot less than what the stock trades at. So the case in point, the option that I kind of wish I would have held on to was the leap looking at July or January 19th, 2024. So over a year out. And it was at a $1,500 strike price. So if I go to that, that's going to be all the way down here. So this one, and this is going to be mind-boggling when you see this, because so I cashed in a $2,500 gain, but I think it 4x'd from there, just if I had held it 2 more days. And I'm going to show that in Ameritrade's Thinkorswim. But let's look at, so this one right now, this is trading at $132 per contract. So this should cost about $13,200. But if you had gotten in when I did, when it was trading at like $45, this would have been $4,500. So to have control over 100 shares of the stock, you get a much cheaper price for the option. And for this one, you can see that this one traded much higher if you look back to like November, 525 a share. So if this kept going, potentially, if this was to get back to where it was then, and keep in mind there's been some theta decay and whatnot, because we're obviously 9 months out from last November. So keep that in mind. But if the stock was to keep moving closer to its 52-week high, this could get up to that level. That would be like worth $52,000. On an initial investment. For me, it was 4,500 or so. Right now, it's up to 13,200. So you can do the math and figure out what the gain would have been holding that just 2 days longer. But anyway, so that's that. And like I said, it's much cheaper to control much more shares of the stock getting the option. Plus, you have leverage. So you have huge, huge upside. Instead of a 20% gain in stocks, you can have like a 200% gain in the option very easily. And I'm convinced that really that's where the real money in the market is made in options. And I'm getting better and better at it. And that's where, like I said, leaps are going to be the way into the future. So now let me look at the Ameritrade portal. And this is really going to be mind blowing here. So just looking, and I have all this pre-configured, the back test feature called Think Back. So buying one of these, June 27th, which is the day I bought in, at the price 42.35, would have netted a profit of 24.80, which is close to the 2,500 that I got. I sold intraday, so I got a little more. But watch this. This is where I really kind of feel like an idiot for selling too soon. Even though I did well, could have been a lot better. So if we look at August 3rd, look at this, up to 4,070. And then August 4th, it would have been a $9,700 gain. And just for fun, let's look today. So it would have lost 500 today. So you could have slept through the day, August 4th, and then decided, it dropped today, but hey, I'm still up, to 92.75. Let me just go ahead and sell. But let's go back to August 4th to show that 9,700. And the thing about this is, like, say you had more money in your account and you were really confident about this stock, and say you had like the money to do like 10 times the contract. So say you did like 10 contracts, just we're going to go to 10, but looking at 5 here, look at this. This would be a $48,500 gain on this one trade. That's like annual salary. And then 6 is like median income, but going all the way to 10 contracts, look at that. $97,000, which those of you paying attention, 9,700 times 10 is obviously 97,000. So that's what is possible with something like this on just one trade. And then think about if you can start doing that several times a year. I mean, it's truly phenomenal potential. And with leaps, the better thing with leaps is that instead of like a short-term call option where the thing's going to expire pretty quick, out of the money and worthless, and the theta decay is exponential towards the end, where the curve is kind of like this, where it's like going to drop very fast. A leap, you have enough time for like 4 earnings reports. So there's 4 potential catalysts in the stock that you can get by holding one leap option. So that's why I'm really convinced that's the way to go. And that's pretty much all I had today. Hopefully, learn from my mistake. If you like that, please remember to like, comment, and subscribe. Take care and keep an eye out for my next video, hopefully coming tomorrow. Thanks so much for watching. Take care.